What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a fantastic day. It's Wednesday, but it feels like a Friday. I think we all know how that feels. Let's take a look at what we got going on in the market right now. Taking a look at the SPY, trading up 0.09%. You got the composite trading up 0.55%, okay, at 19,113 there. You have the Qs, again, and the reason why I have the Qs and the AI Qs here, right under the composite, contrasting with, of course, the SPY, the Dow Jones Industrial, and the Russell Futures, is to kind of, you know, underscore what this is that we're seeing, which is, again, almost in a strange way, a return to what we were seeing in 2022, okay, where the breadth of the market has, it's widened, right? I mean, this is a tech AI run right now, okay? So your big, large caps are the ones that are getting the buys here. I believe there is still uncertainty in the global economy, obviously to do with tariffs and just general uncertainty with how everything was kind of, essentially handled over the past month. And that's, fine, whatever, not making a comment on it like that, but just saying that I think this kind of issue still exists. When you look at these large tech companies, a lot of them are pretty situated, okay? They have a lot of cash. It seems like the new deals that we've just developed with the Gulf Arabs are going to pump some more money into a lot of these companies. Of course, we even saw this with Nebius. This is more to do with Israel than Gulf Arab states. But nonetheless, you're seeing a lot of investments come out of that region into U.S. companies, and in the case of Nebius, just AI companies in general. Okay, so I mean, this is again what we're seeing. If you remember in 2022, that breadth was very large, where there was a lot of tech AI companies rallying to the upside, not much else happening. Additionally, fears of recession in 2022 were there, and wealthier people spent us out of it, and it seems like that is occurring yet again. So, if we're just having a repeat of it, it'd be unfortunate because 2022 wasn't like a super solid year in any way. You have, oh my gosh, I mean, it's kind of like the same movement, you get some huge dip, okay, into about June. I mean, this is recovered in a major way. You saw the recovery in August 8th in 2022, and then we came down right again, and then we just proceeded upwards. This, of course, was an unwind trade occurring, but hey, there's a chance that you see some similar movement with all of this. Now, what I will say, and I don't have data right, okay, I'm looking at TTT. This is embarrassing, man. Let me get back to this, okay? Because you're going to see kind of what basically flat movement, right? It's the same kind of deal, okay? You just start selling off at the beginning of the year. You kind of bottom around June. We come back up, down again, and then we move. 2022 was kind of like this lost year in a sense, right? But again, a lot of this was having to do with large tech companies, okay? And the push for AI. And again, right here, right here in August, this was the unwind. It's weird how that chart looks nearly identical. I don't know. There's still a lot of liquidity going on here. Wealthy people are still spending. That can absolutely help. You probably will continue to see strong spending throughout the next 90 days. Again, with this 90-day reprieve between the U.S. and China, this is not the permanent deal, right? A lot of things are being made on the fly, so now it seems like Boeing planes are kind of, not going to get targeted as hard as was anticipated. I think you're going to see exactly what we saw in Q1, which is a lot of like just buying for the sake of buying because you don't know what's going to happen at the end of those periods, right? And that could, in a sense, float this market for a little while longer. What do we do about the debt wall, which is what I was bringing up earlier this year? I mean, it just seems that we're going to keep spending, okay? And that could be causing, some of the sell-off in the 30-year and the 10-year. Looking at some, looking at the USD Japanese yen, people are saying that they're selling off bonds and, foreign governments are, right? I'm not seeing necessarily an appreciation of currency against the dollar, at least right now, which would kind of indicate to me that that's not necessarily what's going on. Additionally, if we're looking at, more indicators that there is some kind of institutional risk on. I mean, your corporate bonds are off a little bit today, but listen, I mean, this is recovered in a major sense, right? If I can get on the 1 year. I mean, that kind of, in my analysis of it, indicates that people are risk on, right? And this is, again, not like meme Robinhood buyers getting into things like high yield bond ETFs, okay? Additionally, the TLT to HYG, very low, okay? So, I mean, this is kind of indicating, again, that there's, major pricing into risk assets, I think. So, whether or not I think that is the wisest thing is kind of a different story, because this is just what is occurring, And if you're looking at some of these deals being made with your large tech firms and a lot of the stuff developing out, like I think Meta's plan to release, a new cryptocurrency or at least some kind of blockchain token is interesting. You're seeing some of the tech companies cut. Again, it just reminds me of 2022. If anyone else is kind of, if that's ringing a bell for anyone. Same kind of deal. Big cuts on people, fear of recession, wealthy people spent through it and we were fine. And then we kind of just ripped from there, Now, there are obviously other variables going on here, namely being Trump and the Trump administration. And then additionally, it seems like retail doesn't care. And they just like major buy dips at any point, right? Because, I mean, if you look at some of these numbers, some of the articles coming out, I mean, hedge funds were not in this, as you talk with like fund managers and everything, after what just occurred, there's no way you're at these levels and being like, you know what, fine, we're totally good. Just keep buying the dip. Like, no, some of the fund managers I know that I speak with, a lot of their clients were like, hey, I want to get out of this, or, we need to transition into other things that are not necessarily treasuries, definitely not equities. So, I mean, all I can get left with is that a lot of this, of course, was retail. And no doubt there's like institutional buyers at these kind of places. But I mean, if you listen to what any of the large guys are saying, it's like, we're favoring cash. And I don't necessarily blame them, because in a way, I am still favoring cash. Now, of course, we're in some equities just on a longer term. And, that is a little bit conflicting, I understand. But some of the things I just kind of like, and I liked it at the price regardless. But yeah, I mean, weird times for sure in this market. Additionally, you have gold coming off, right? 2.23%. So that again is kind of indicating, a little bit of a risk on. Bitcoin, this is interesting, has been coming down the past 2 days, but I think this is more of a digestion period. We'll talk a little bit more about Bitcoin and the crypto cycle that's going on now. It's coming about very rapidly. So let's talk about that. We'll be right back.